Well, having been sort of investing in India for nigh on 30 years, one's learnt not to rely too much on government. And in many ways, the success of India has been lack of government rather than because of government. The companies in India that have done well have been those where the government has interfered less. And we came in very, like everyone else, hopeful that Mr. Modi would transform things on day one. But the reality of India is such that one man, however well-meaning he is not going to change things. And for the optimists, I think Mr. Modi has proved a slight disappointment. But for people like us who've known India for a long time, I think things have progressed as we expect. So change is happening and the genie is out of the bottle.
Well, let's then talk about your India investments. And as part of your EM fund, as also your India fund, you have a big holding in HDFC. Now, the tricky part there is Goldman Sachs recently came out and put a downgrade on HDFC, citing rising competition causing pricing as well as growth pressures for the company. I mean, it's quite easily understandable that everybody, given the liquidity situation in the markets, is getting into the loan business. Is that detrimental for HDFC? Does that get you worried?
Oh, yes. There will always be more competition, which is a concern. And of course, the valuation of HDFC is a concern, but it's a super business. And one day, yes, its margins will be eaten away, others will come into the business, and it will always have to be sharp and on its toes. So far, so good, but we live in fear of all our successful investments in India as we do everywhere else. Businesses can disappear not quite as quickly as they arise, but they can disappear very quickly.
Right, but having held HDFC for the period that you have and gained the returns that the stock has made for your portfolio, would it be a time where you would reconsider kind of stepping back a bit on the investment and looking at other spaces in the financial sector in India? There's a lot of work happening in the PSU bank space and the state-run banks, and valuations are cheap. Is there merit in re-looking at that space and reworking your financial sector investment in India?
We look constantly, and there's certainly a clear temptation if you have HDFC at 3 or 4 times book value or whatever P ratio it's on, up in the 20s, compared to various state banks at a discount to book. And single-digit price earnings ratios, if you believe them. But does it tempt us to switch fundamentally out of the quality end into what I would argue is a lower quality end? It's difficult. It's difficult for us. I understand the logic of what you're saying, and it's certainly something we worry about, but over the years we found it best to stick with quality. So would we take a bit of money off HDFC from time to time because it's a bit pricey and there's potential of competition and the state banks getting their act together? Yes. And if we could find equally good companies, again, yes, we would diversify a bit, but fundamentally I think we'll stick with our large holding in HDFC.
Yes, and some of your other holdings are technology companies, TCS and Infosys. You have some of the consumer names, so HUL is part of your holding. But this one caught my attention. Container Corp is a holding. Did you participate in the recent offer for sale? And is that likely to be the theme? Because there's going to be a lot of state-run companies hitting the market. There's talk about state-run insurance companies coming to the market. Is that a space that is exciting you?
Yes, I think anything sort of distancing itself from the state does excite. And the interest in Concor or Container Corporation has been, it's been one of the more professional state-run companies, if you catch the nuances. So we've felt comfortable with that for many, many years. and have held it for 10 or more years within our portfolios as a professionally run state company, still with the concerns we always have in not just India but any country over state ownership and the way state-controlled companies are run and controlled, and whether they're as professional as they should be. Concor is one of those that's been at the most professional end of state-run companies.
There's much pressure on the central bank to cut rates once again. They've given 125 basis points of rate cuts to the economy. How do you as an investor would look at that move and what that means for growth in general, and also how that really trickles down on earnings growth, which have been lagging? I mean, what are your own forecasts, and do you think that will materially change with another series of rate cuts?
Well, first and foremost, we want the Reserve Bank to remain firmly independent, and it's done a super job so far and hasn't proved totally pliable to political interests. And the big concern we have as far as the Reserve Bank is concerned is the banking sector as a whole. So the recognition of bad debts and bad loans within the banking sector is probably the most negative thing that we think about India. Yes, would we want Mr. Modi to implement reforms? Of course we would, but some of the core things that concern us are the level of bad debt within the banking system, and that really has to be addressed before India can grow again. And it's quite a tightrope the central bank governor is riding in between encouraging growth but also trying to clean up the banking system. So I'm not sure whether interest rates should be reduced radically over a quick period. I think the big issue is to sort out bad debt and enable good lending to occur. You just need to look at Mr. Mallya, for example, to see how much bad lending has occurred in India, and that's rife, which is appalling.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.